What effect does war have on the stock market? Today is Monday, June 23rd, and over the weekend, the U.S. engaged in bombings of Iranian nuclear sites. And then today, we're hearing reports about Iran responding by threatening U.S. assets in the area, and then also a bombing on a base in Qatar. While we grieve the idea of human loss and the devastation that war can have, we also believe that it is important that our clients based here in the United States have an understanding of what war can do to their accounts and their positions that they hold in the stock market. This is not a video to discuss the morality of war. We believe that is a conversation best had over a cup of coffee and with much more time on our hands, but rather to look at the effects that this may have for you as you're sitting at home. If I had to just put this in one sentence so that you could understand what the effect of war is on markets, I would say that there's usually some time of volatility and then markets shrug off what they've experienced. There's this guy named Ben Carlson. He's the director of institutional asset management at Ritz-Holtz Wealth, and he shared that between the beginning of World War I and the end of World War II, U.S. markets increased 115% combined throughout those two different wars. Now, it's worth noting, of course, that in World War I and World War II, right, the U.S. was a major arms dealer and providing a lot of materials for the European theater. It is, though, that between the two most devastating wars that we've seen in modern history, markets came through ahead rather than falling behind. You may remember that in February 24 of 2022, Russia invaded Ukraine, right? And what we saw is that by March 14 of that same year, the S&P 500 was down 7%. But then a month later, in mid-April, after the volatility that we experienced, markets had recouped their losses of 7% and had even experienced some gain as well. In investing, there's this thing called the war puzzle, right? It sounds like this war room type of language, but it's this idea that oftentimes if there's talk of a war, markets will respond by going down. But once that war actually happens, if it does happen, markets usually go up. Whereas if war is just sudden out of nowhere, the markets usually decline. It's confusing for investors because there's no real rhyme or reason as to why this happens. But what we do know is that the Middle East is often in conflict. And so what we're seeing today on Monday, June 23, is that markets are not really responding in a negative way. Yes, oil prices are kind of going back and forth, but the S&P 500 in a lot of tech sectors are also posting gains for the day. And really what a lot of investors are saying is that the volatility of the Middle East is already baked into the prices of the market. Again, we want to come back to the idea that we may experience some volatility in the short term, but chances are that we're going to come out on top of all of this. Even as I record this, right, knowing that Iran has retaliated by attacking a base in Qatar, we're seeing that markets are still up. And it's a good reminder that markets are efficient. They respond very quickly to headlines. For the average investor, which is our clients, right, that's us as well. For the average person, by the time that we're responding to a headline, chances are the markets have already baked that into the price. It's this idea of market efficiency. The idea that as one headline comes out, markets respond. By the time that you place your trades, chances are a new headline has come out and markets have responded to that as well. Don't try and time the markets. We at Strategic Financial Group, we look at long-term trends. We want to be in positions that are going to experience gain over a long period of time and not try and just buy into something for a quick buck here, sell, and then buy into something else 2 days later, right? That's called day trading. We don't do day trading. We do long-term trends. We leave the day trading to the tech bros and the finance bros in New York City and let them experience the crazy ups and downs. We want to see long-term growth and not just explosive growth followed by explosive loss. Again, if you have any questions, feel free to call into the office, send us an email, check out our website at strategicfg.net, and we'd love to talk to you about options. Thanks.